Hello everyone. If you want to go to my free course, type henry-ward.co.uk into Google, then go to Henry Ward Trading, and then this here is my free course. Click on Start Today. If you want to go on to the webinars that I do every Sunday and every Wednesday, click on Trading Academy and then click on Start Today. So this is the Trading Academy. This is the full training, the webinars, direct access to me, everything that you want. As we talked about sort of last week, we were looking at sort of this trend line here. We were looking at price action coming up to this level here and hitting this level and coming back down. We also talked about this triple bottom. Okay, now with the momentum that was down, with everything that was down, it wasn't a trade I was looking to take long off this. Even though we had 1, 2, 3 bounces, it looked like there was more momentum to the downside. Now, this is the beauty of the market, is that since then, look what's happened. We've actually had a really nice jump to the upside. And this is one of the things about trading, is that unfortunately, sometimes we can't predict what's going to happen, and then sometimes we can. Now, can anyone tell me why, what were the 2 main reasons for the market to actually jump here? Can anyone tell me what the main reasons for them were? Roshni raised her hand. Thanks, Roshni, for raising her hand. So can anyone tell me? Plans for alternative energy. That's not good enough to move the market like this. Interest rate hikes were one of them. Yes, interest rate hikes. And peace negotiations. Okay. Now, last week, the first part of that was that Russia and Ukraine seemed to have good talks. Okay. Now, I put the air quotes in there because it seemed to have good talks. What was coming out seemed to be good. Now, as it happened, it was just a lot of paper talk from Putin. But again, at the end of the day, he has these reasons for doing what he's doing. We may all sort of disagree with it, but we thought from the news was coming out of both camps, we thought that this could be a little sort of a stepping stone to potentially have some peace. A stepping stone for actually civilians to leave the cities that are being war torn, and then he goes ahead and bombs hospitals and stuff like that. So that then didn't come to fruition. Also, what happened in the market is then we had the Fed. So the Fed was telling everyone that they were going to move the interest rate up 25 base points, or for every normal Joe soap 0.25. Now they're going, we will probably put it up. We'll probably put it up 2.5 or 0.025. And that's what we're probably going to do. We're probably going to do it that much. And then all of a sudden it happens. So which means then the market has reacted to the same way it did with Brexit. So as Brexit was uncertain, the market was dropping. And the same with this, as the interest rates were uncertain, but we knew how much they were going to raise it by, and they didn't frighten anyone by raising it more or less. So then once it happened, now all of a sudden the market has jumped in a clear direction. Now, whether this is going to continue remains to be seen. So what we have here at this particular point, we now have a double top. Now, so we've had 1, 2, 3, 4 buying days. Now, 3 of those were buying days. 1 of them was stagnant. So we had 1, 2, 3 buying days, 1 stagnant. And now, since then, we've had a stagnant day. And then today, obviously, it's only literally opened. So unfortunately, it hasn't really moved yet. But again, it's at a point where we don't know what's going on as of yet. So if today's bar finishes like that, we have, just say it finishes like this. Okay, just say today's bar finishes like that. What would that tell us? What would that tell us if that bar finished like that today? So a nice little tiny inside bar. Absolutely, it tells us indecision, but can we be a little more certain what? It tells us a little bit more than that. Absolutely. So it now tells us a little bit more than that. It tells us that here, the buyers that are in this market have literally jumped out of the market. So that's what's happening here. Now there's a battle between the buyers and the sellers. Not so much. It's telling us that the buyers are literally leaving the market here rather than a battle going on. Because if you're a buyer in this particular market, you're not going to be massively bullish that the market is going to continue going up. So it tells us exactly, Jennifer, it tells us that there's a possible change of direction, possibly going to change. There's a potential jump in direction. It's potentially going to turn around. So that's what this is telling us here. There's a potential change to the downside. Okay, so that's what this tells us. Now, again, we can be wrong, the same as we were when it hit this level. We expected it to drop down and it didn't. Now, ideal scenario, the absolute ideal scenario in this particular scenario would be for this to continue going up there and then come back down to that level and then pop back up. Obviously, that's the ideal scenario. But we have to look at the reality of it. The reality of it is, if this bar stays like this, we would expect more downside than upside. Now, will it break this level? Well, it looks like this is pretty strong. It looks like this area is a pretty strong area. Okay, so if it comes back to there, we potentially look to buy it again. But at this particular moment, we'd expect more downside than we would upside. But that is the ideal scenario in this. That's exactly what we'd like to happen. Now, unfortunately, trading doesn't play out like we wanted to play out, just for the sake of it. Because if it did that, it'd be absolutely amazing. That'd be exactly what we all do. Okay, but that's the scenario there. Has anyone got any possible other scenarios that may happen here? Anyone got other possible scenarios that may change? Sideways. Absolutely. It may go sideways. It may come down a fraction, go up, down, up, down, up, down, up. Okay, so it may move sideways. But generally with this market, it doesn't move sideways for too long. Look, for me, that was sideways here. We had 2 months and then it took off. But prior to that, we didn't get much. We don't get much sideways on the likes of this. You could say that there, we had a month. Not really anything there either. So we don't generally get a huge amount of sideways on this market. That's probably the last area of sustained sidewaysness was July, August, September, October, November. So we had 5 months of movement to the side and then it sort of took off. So that's the last time we had sustained sideways movement was 2019. So we may get some sideways movement on this, but the probability of it would be to the downside. So can we trade this? At the moment, no. Why would we not be looking to trade this at the moment? What would stop us from taking a trade on this? Now, when I say trade, I mean as in trade a CFD. Nuclear war and the bottom falls out. Okay, Tom, I see that you're quite bullish on the market. So, well, that is one scenario, absolutely. But remember, that is worst case scenario, isn't it? That is the worst case scenario. That's not something anyone wants to see happening. Now, again, if that happens, probably doesn't make any difference what happens to the stock market because we're all dead. Okay. It breaks the trend, but the trend is down. So Ricky, the trend is down. It doesn't break the trend. So best case scenario is if it breaks the trend. Worst case scenario is if it continues going down. So the idea here is that we're looking at a bit of bullish momentum. Now we could take a short here because we are looking at the overall momentum down. We have a double top, so we could take a short here. But with this bullish movement here over the last 4 or 5 days, there could be a little more to the upside, which means that you've now taken a short in a market that actually looks promising to the upside. So that's why we're not jumping in here, because we're right on that edge. I would rather wait for it to come back down to this floor and then potentially buy it there. But is there any other way we could trade this? Is there any other way we could trade this? I'll answer that now in a second. Lower time frame, no. What we could do at this particular point is you could start investing in stocks. Now, Tom said something there about nuclear war jumping out. Now, as an investor, we keep an eye out for that. Okay, so that is something that we have to keep an eye out for. That's absolute paramount. As someone who's in the markets, you have to keep an eye on that. And if that happens, you close every single trade you have that's long, and you start shorting the market. Click the button, the sell, and you take as short positions as you can. Okay, try to take stuff that you think is going to go to zero, and then you take them. Okay, so that's the other side of this. But if that doesn't happen, okay, if that doesn't go ahead, how do we then make money? Okay, now, are we at the bottom here? Absolutely, we have no idea. We have no idea. But what's after happening is we've had 1, 2, 3 bounces. The market is after moving down 30%. So we could be at the bottom here. Is this a point where you're now slowly starting to look at this and go, okay, I'm now at a position where I could start dollar cost averaging into your positions? Now, I dollar cost averaged in, and I bought the likes of Nasdaq, or not the Nasdaq, Apple. I bought the likes of Google. I did, and both of those positions are now a little bit up at the minute. I also bought the likes of PayPal. Now PayPal is down about 20% on the position that I bought about a month ago. So the idea is that this could potentially be that turning point, or it may not be. But if it drops another 30%, I will happily take another position down here. So I'm dollar cost averaging at points. I think that this could be about to turn. Now, Cassie asked about Mara and asked about another stock. Now, the thing is that at this particular point, I am only investing in stocks that I think will continue to be around here for the next 10, 20 years. So can anyone give me stocks that they think will be here and will continue growing for the next 10 and 20 years? What do you think is the absolute winners that you will think will be here and will continue to grow, whether it's a pandemic, whether it's a war, whether it's we fall out with each other, whether there's a divide in the world with China? What do you think are the things that will stay here forever and ever and ever and ever and will continue to grow? Okay, so we have a few here. So someone said Amazon, Microsoft. Okay, I can't disagree with Amazon and Microsoft. Amazon, will they continue growing at the same rate or with the same growth? I don't know. Microsoft, absolutely. Someone has said Lloyd's. No, the banking industry has seen peaks and troughs, and it can blow up in a second. Someone said DHL. Okay, now DHL has done extremely well through the pandemic because a lot of people are now buying online stuff, and that's where DHL have worked really well. But if you put into perspective Royal Mail, okay, so that is the English company that sends letters and stuff. Without jumping into this industry of actually delivering packages,
Royal Mail were very close to going bankrupt, twice or three times. I think they were even bought out by the state at one stage, if I'm not mistaken. So the idea here is that that company may grow, but it wouldn't be something that I'd be investing in as a staple, as something that will continue growing. Google, absolutely, I can see Google being around for the next 10 years. If it's not broken up because it has a monopoly on the market. Someone has said McDonald's, but again, if we go into a massive recession, people stop spending money going out. So McDonald's may not be, okay? So we have Microsoft again. Banks, again, I've covered the banks. Coca-Cola, potentially, because it's a cheap soft drink that is not too expensive and people are addicted to it. AAL.L, have no idea what that is. Audrey, you need to tell me. Tesla, again, will people invest in technology if we're in a recession, the likes of a car that's electric and stuff like that? There maybe it may be that we're well, and by 2030 there's no electric cars in the likes of the no more combustion engine cars in the UK. So the electric cars could continue growing over the next 10 years, 15 to 20 years. So that could be a good shout. But again, you have to have that trade-off versus a car that is, I just hear Tesla are going up about 7% on their cars now because of the chip shortage, because of the cost of raw materials now, the likes of copper, iron, metal, all that sort of stuff. China seems to be going up. China seems to be a good place to invest, yes. BRKB, is that Berkshire Hathaway? Well, he seems to have a really, really good track record over years and years and years. So that wouldn't be a bad investment. Tesla, Microsoft, Ford. Again, I wouldn't be putting money into Ford, the same sort of logic as Tesla. Ford have a track record of having a big phase one and then a big drop again. Okay. Amazon, I would expect RML. I have no idea what that one is. Intel, again, Intel depends on what part of that arm. If they can continue to invest in companies that are on the edge of cutting edge. So remember, Intel at one stage were computers, then they turn into sort of computer chips. So if they move and jump with the times, then yes, absolutely. Micron, I don't know them particularly. Anglo-American, not, it wouldn't massively jump out at me. Oil service stocks, again, with what's after going on with the oil crisis, I see huge pushes to move away from oil. We had a sort of a little bit of a shift when oil went down to sort of $0 a barrel, or minus $37 a barrel. And again, with what's going on here, I see a huge shift that will happen into other energies, whether it's solar, whether it's wind, whether it's whatever it is. Can I look at the China 50? I will. NEO falls into the Tesla thing there as well. Gazprom, nope, I would absolutely stay away from it. How about health and biotech? Again, but you have to know the ins and outs of that. What company is bringing out what sort of innovative stuff that will continue to grow? So they're the idea. But for me, it's not something that I would invest in. It's the actual staples that I would jump in. So the likes of the Googles of the world, the likes of the Microsoft, the likes of the Apples, the likes of the Walmarts, the likes of Home Depot, the likes of those ones that have gone through boom and bust and boom and bust and have continued to grow year on year on year on year. Okay, so they're the ones that I'd be looking to sort of jump in. Okay, so we'll have a look at China because people are sort of looking at China. Now, someone has said, I'm not sure about China. China could end up being like Russia in a few years' time. It absolutely could. Absolutely could. But again, it would be, for me, I think China's had a huge investment in the likes of Africa. They're putting in what, 150 billion into the likes of Africa to get innovation, to get technology. It means then they have an easy access into Europe then as well, which means then any sanctions that's put on by any of the countries, then you're affecting the likes of Africa as well. So Europe have now sort of tried to mitigate that, and then they're putting a 50 billion package to do innovation in the likes of Africa. So it's something that is it's something that they're trying to do. Yes, every country is in Africa, but again, they're not putting in the same amount of money that the likes of China have, because they're trying to get a foothold into the likes of Europe, have an easy access in there, a backdoor in. So do I think it'll go down the route of Russia? I don't think so. But again, it's a dictatorship as well. But do I think there will be a huge growth in this country over the do I think there'll be huge growth in this over the next 10 years? I actually do. Looking at where the stock is now, looking at what the drop they've had. Okay, but look, this drop is a lot to do with the likes of the sanctions that the US put on them. Okay, that's what a lot of this drop is. Now, do we think there's room for this market to continue growing? Absolutely, absolutely. And what's the general consensus? It dropped here 40%. What is it? By 2028, they expect the economy in China to be bigger than the economy of the US. Just by that alone, we would expect the economy to continue grow. We'd expect technology to continue grow. So do I see this dropping down? No. Do I see a slowdown in the US? Yes, because people are a little more, and I'm going to say the word educated, and I don't mean it that Chinese people are not educated. I mean they're educated in the way that they're having smaller families. The family size is much smaller, so thereby by even just that sort of education, it means then there's less population, and also the population of China is absolutely monumental. Okay, so that's the idea behind it, and it continues to grow. So that's why I expect this to continue. But again, it's small, incise. Make sure your entries or your trades on these are stealth-like, that you're making investments in the likes of these companies that you're happy with for the next 5, 10, 15 years, that you expect them to continue to grow. You're not jumping in to make a quick buck. And if you do happen to jump in a stock that has taken off nicely, then that's an added bonus. So the idea is slow and steady with the likes of these at the moment. Am I looking to jump in on CFD's trades at these present moment, any of these stocks? Absolutely not. It may be 6 months before I look at trading any of these stocks as CFDs. The idea is to slow and steady, let the market turn, let the market to get a little more confidence. And then when there's a bit of confidence, then we can start seeing trends. We can start seeing what stocks are doing well. So which means we can then jump into the likes of, the CFDs, that stuff are actually doing well. Okay, so that's what we're looking to do. That's what we're trying to do. Now, if we look at, say, the European market here, so the European market has had a little bit of a recovery, something very, very similar to the US. And we can see the German DAX has popped up, and it's had, 4 days of moving nowhere. It's like the market is just sitting, waiting for something to happen. And then depending if it's good, it'll pop up. If it's bad, it'll drop down. So we talked about the CAC. We talked about this trade here. This trade is still valid. Anyone that took this trade, you're down, probably, if you risked 100 quid, you're down 60 at this present moment in time. But again, this could as easily pop to the upside as to the downside. You would expect probably more probability to the downside. Why? Because the market is down. There's sentiment, the market is very spooked. Anything negative that comes out, all of a sudden the market drops like a stone again. And you will have massive amounts of sellers jumping in. The UK market here recovers a little bit. There's much more bullishness in the UK market than the European ones. Okay, so we can see that if we're looking to trade, this could be a nice little area, the likes of the UK 100. So does what I've said there make sense to you guys? It's slow and steady at the minute. There's no sort of jumping in and out of stocks at the minute. Slow and steady. If you like the look of a stock, if you look the like of something that has genuine value, you expect this to continuously have genuine value, then you have to ask yourself, do you expect geopolitical news to affect it? And if it is, how badly? What's the worst case scenario for this stock if that happens? And then if you're still happy with that, that's when you invest in that particular stock. So that's the idea with it now at the minute. So we have the tide has turned a little bit. So we now have to look at geopolitical. We also then have to look at the stock, and we have to look at, is it something that for me is going to continue growing? If it is, then absolutely brilliant. That's what we're looking to do. So we're going to go over on to the usuals that we've looked at. So some of the commodities. Now we talked about oil on the Sunday webinar. So we talked about taking oil off this sort of level here. Now I didn't take it myself because I was looking for it to come back to this floor here. I didn't think this one was strong enough, but I know some of you guys took this already. So 6.6% would have been what you were looking for. And to that point, it was 13%. So you would have touched a whisker of the 2 to 1. At the minute, you're probably what, 1.5 to 1 up? Yeah, 9.5. So 1.5 to 1 up at the minute. And just inside that blue horizontal is where we're looking for a 3 to 1. Now, if you took this trade here on the daily chart, okay, so this is now to everyone. There should be no one on this webinar that does not answer this question. Okay, so I would expect everyone. So if you're listening, have a look at this chart for a second now, okay, and put yes or no in this question, or answer the question. Is this chart at the moment, would we expect this to go up and hit the 3 to 1 and potentially hit this high up here, which is $130 a barrel? Or do we expect this to move sideways and drop down? Or do we expect this to continue going? What's your thoughts on oil? Do we expect this to continue growing, or do we expect this to drop a little? Okay, so good. People are actually so everyone seems to have sort of jumped in and had an answer. Okay, so about 60-40 people said sideways and then down. Now, in my opinion as well, we're probably near the top of this. It may take this out slightly, but for me, this is probably close to the top of it. So why I asked that question is because I'm just looking at, say, the UK. So I talked about it last week that Ireland is going to reduce the tax on actually oil and gas in Ireland. Now, what's after happened is Rishi Shah has now said in the UK that he's going to go out and he's going to drop some of the tax on oil and gas as well. So it means that people can afford to jump in their cars and actually go and drop their kids off from school and come back from school. So do I think that there's more room to the upside? Maybe, unless something happens, unless unless there's a stronghold or the likes of the Saudis decide to stop pumping more oil, is also the governments have said that they have I think it was about 1 trillion gallons of or trillion barrels of oil in storage. So it means then that they're slowly releasing this to actually keep up with the bit of demand. So yes, I understand that Europe are going to ban oil. So Europeans are going to ban oil from Russia, same as the US did. I understand that, but I don't think it'll have the same knock-on effect as it will as the US banning it. Now, maybe I'm wrong. If I'm wrong, we will trade it. We will absolutely trade it with that in mind. Okay. So if the trend is up and it gives us a good opportunity, we'll trade it up. But for me, I don't think there's much more upside in this. I can't see it going to $150 a barrel. I can't see it going that far. But again, that's my opinion, and it is an opinion, okay, based on what we've seen here, based on what the governments are trying to do. But again, if demand drives it, we all know traders love to have a huge spike and stuff. So if there's enough momentum, if the news is bad enough, this could all of a sudden spike like we've had this. But again, see the sell-off, that's what you have to be aware of. You have to start trailing your stop losses. You have to start tightening in what's going on, okay? So that's what I would say on that, okay? We have a look at natural gas. So natural gas, anyone who took that trade, well done. So anyone who took that natural gas trade there that we took, well done, 4.3%. And then the target was 11, which was 2.25 to 1. Well done on that. That literally hit a little bit of profit today. Why did we have our take profit here? Why did we have the take profit there? Why didn't I just literally go, because the 3 to 1 is 3/4 is 12, so 13% is a 3 to 1. So that's where our take profit, that's a 3 to 1 take profit. So why did we actually put our take profit there? What was the thinking? What was the thinking behind that? Actually, we had a little bit higher. We had it there. So what is the thinking behind that? Absolutely. Absolutely. So most people have got it. So for anyone who doesn't get it, I will show you. So I'm going to get a horizontal level. I'm going to pop it in there. I'm going to change the color of this to say black. So we're just differentiating. I'm also going to get some arrows here so we can actually have a quick look at it. So we can see here, my green arrows, that we had a bounce there once already. We also see some soft bounces around here, but I'm not going to point those out because it hasn't. What I can also point out here is, look, the open and the close of that bar. I'm right on the edge of the open and the close of that bar. I'm also showing here that I'm at the top of that wick. So we've had one bounce there already, there on the open and close, and then another touch there. The idea behind this is that when we're talking about traders and trading, what happens a lot of the time is this. See this wick? So I'm going to draw it out. So you have a bar that's going up nicely. Your take profit is there. And what traders will do is they will now start selling the market before it hits that level. And why do they want to sell that before it hits that level? Can anyone tell me why? What's the reason they start selling before it hits that level? Well, not that it's resistance, not even to stop momentum. Okay. So it comes down to liquidity. Okay. So it comes down to liquidity. Years ago, and if you I'm trying to think of the trader Peter something, and he traded wheat. I can't think of his name. I read his book there a couple of years ago, and he traded wheat. And what happened is, when you take huge positions in the market, you were able to monopolize the market. Peter Lynch, that's it. So which means then that he's left holding the bag. So he is the major player with holding wheat. So which means then if he goes to sell off a position, he's actually making the market drop because he's the main player on that particular market, which means then that he can't offload his position because the position size is now too big. Now, there's no difference in sort of today's market. Okay, so it comes down to liquidity. People still follow the same rules. Now, we're not talking about people who have 50 quid or 100 quid or any of those. So the idea is we're looking to make sure that people haven't hit the take profit here. Because how many people have a take profit right here? Where most people who are decent traders would have a take profit there, which means that just say there's £1 billion in the market. There's probably 500 million of that there that are at that level, which means then half of the money drops out at that particular point. But if I short the market here and it starts jumping down and then the sellers jumping down, as it's coming down, those guys' money is still in the market. That 500 million that would have triggered out here, it hasn't triggered out of the market. So as I'm shorting the market, when I jump out here, there's still loads of money, liquidity left in the market. Okay, and that's what happens. That's why we have sell-offs just before the level, and that's why we have buys just before a really key level. And then the opposite comes to the stop loss hunting. Okay, imagine you're shorting the market here. All right, so we're now going to turn it on its head. So you're now shorting the market. So you see that that's, we'll just put it there. So you see that there's my stop loss. We're now going to put a little entry. So the entry is on this side of this level. Okay, so you're entering there. And there's your stop loss. So then this was this bar here, and then the next bar triggers you in. So the next bar triggers you in like this. So it's going up, you're now shorting the market, you're now in a little bit of profit. Now what happens at this particular point is we have a big, huge bar that does this. But at the end of the day, this bar looks like this. How many times have we seen that? And you're going, absolute sugar. It's literally triggered you in, triggered you out, and then come back in our direction. So the very same thing happens with stop loss hunting. What he's trying to do is shake all the liquidity out here, hit everyone's stop loss. So then once they come into the market and they are starting to sell, so it's now dropped down. So the people who lost here are not in the market yet. So it starts to come down again. They're still not in the market. And then it comes down here again. So the people are now jumping into the market. So these guys have got triggered out here. They're now jumping in somewhere along here because it's fear of missing out. They can then jump out of the market now. Why? Because people who are now waiting on that certainty are then jumping in and shorting it. So that's the reason why we have these areas. So that's why as a trader, we put our take profits just above those levels, literally just below them, depending on where our take profit or stop loss is, because we're expecting a little bit of market manipulation. We're expecting it not to hit that level. So we need to have our take profit just inside it. Or our stop loss, we have our stop loss slightly above it to try and stop the stop loss hunting happening. Does that make sense? So that's one of the reasons why we have it slightly inside. Now, again, there's another play you could do at this. You could par close your position, and then you could take your take profit and move it up to here. You could par close your what is it? We're 2% up, 2.5% up. You could par close that position, move your stop loss inside break even up to about here. And then if this continues to go, you're in bonus territory. Okay, you're in bonus territory. So someone has said we should be shorting at the minute. Well, Gasper, that's actually a pretty decent, that's a pretty decent look at that now. So we're gonna actually have a look at that now that you say it. So I'm just going to move this in out of the way just so it doesn't get involved in anything. So like we said, we have a bounce here, we have a bounce here, and we have a bounce here. Okay, so this could be a good position to short a market, correct? Now, for us to short a market, we have to have a look at a couple of things. So and I want everyone, and I don't want the 2 or 3 people who know the answer. I want everyone to put this in here. What are the main things? There should be about 3 main things we're looking for shorting the market. So there should be sort of 3 rules that we're looking for. Pop them into the group there, 1, 2, and 3, and then pop them in there. And I want to know what are the 3 things you look for when we're shorting the market? Because remember, okay, so I'll actually reword that, because that's actually a little bit wrong. Okay, we're looking for 3 things when we're trading a reversal, because this is a reversal, because we're looking in the market to change direction. There's the phase 1. We're looking now for a phase 2. So this is a reversal. It doesn't matter whether it's going up or going down. We're looking for the reversal. So this was in a downtrend. It hit here, it popped back up, hit here twice, popped back up. It's hit here the 3rd time. So similar to this one. So we've triple bottom here, and we've a triple top here. What are we looking for there? So everyone give me your rules. Okay, a lower low, a reversal is, you're never going to get a lower low on a reversal. Okay, if you start getting lower lows, that's a change of direction. It's not a reversal trade. 2 clear cycles again is a trend. Okay, so that's not a reversal. Okay. Whip. Gasper, what is a whip? Are you no idea what a whip is. Perfect. So there's been 3 or 4 good answers. Okay. Now one is divergence. One is divergence. One is a horizontal level, and the other is price action. So at the minute we have this. So we have a horizontal level. So we're good in the level department, because we have found this horizontal. We have that one there as 1. We have 2. We have 3. So now we're touching this on a 4 times. So we're good with the level. So level is there. Next one is price action. So price action. So what type of price action bars are we looking for? Pop it in the group there. Pop it in the chat what we're looking for. I'm gonna do them here. So pop them in the group. Or the other alternative perfect bar is this. So just so you guys know, changes to green. So they're all the ideal bars. Engulfing. Okay, nope. So doji bar. Okay, a doji bar, D-O-J-I, a high test bar. So it's went up, tested its head and come back down. Train track reversal. Okay, so one buying day, one selling day. Now, if you put these two together, they are the equivalent of this bar. So the open is here and the close is here. So it's equivalent of this bar here. And then the other one is an inside bar, not an engulfing bar, an inside bar. So this is inside. So the buyers took control. And now look, we have this indecision. So they're all bars that we would like to see happening here. Now we're on a daily chart. So if we get tomorrow's bar like this, inside bar, that's perfect. So our entry goes there and our stop loss actually goes above that there. So that's where our stop loss goes above. That's where we're looking to trade. Now, what we could do with this either is we could drop down to the smaller time frame. We could drop down to the smaller time frame. So we're looking at this area. We're looking for a price action. We're looking for one of those price action bars. So if I drop down to the smaller time frame, which is a 4 hour, I still have this big, huge bar. So that means then this is not what I'm looking for. So this means this trade for me is not here. Now, I know Tyson is going to say, but Henry, drop down to the 1 hour. I'm going to have a quick look at the 1 hour just to give you an idea. That's the kind of bar that we're looking at. So the potential trade on this now, when that bar is finished, because remember, this bar is not finished yet. So your entry will be there. And the stop loss will be slightly above it. So there. And you're looking for, because it's a reversal, we're looking for at least a 1-to-1. I wouldn't be massively looking for much more. So 2.8, about there. Okay, so I'm not massively looking for much more than a 1-to-1. So we're looking for this. We're looking for this bar here. Now, the last thing for us, so me personally, I don't trade on the 1 hour. I wouldn't go down any lower than the 4 hour. But again, that bar, if it finishes like this, is a decent setup. So change that back to that 4 hour. What I'm also looking for, I change it back to the daily, is I need divergence. Now, there are three things we can use for divergence. So we stick the indicators in here. So there's three different things we can use for divergence. Now, one is the RSI, Relative Strength Index. So we have the RSI. Now, what we're looking for is, see this here? See that high and this high? We're at the same level. Now, if we come down here and look on the RSI, are they the same level? What we want them is we want them going down. We want them going in the opposite direction. I get this here. I want this high here. This one, I want them going down like that. I know we don't have that, but that's what I want. I want them disagreeing. So see, this is level. I want the RSI doing this. Now, there are another two. So the RSI is one of them. Also, we can use the stochastic. Stochastic. And I do not want to see anyone using this 80-20 crap. It's absolute crap. You can use it in conjunction with other stuff, but I don't ever want to see anyone going, well, it's above 80%, that's a short. It's below 20%, that's a buy. That's absolutely codswallop. Do not go near it. Stay away from it. We can use it in conjunction with. You never use it as your strategy. Okay, so there's the high. And we go to there. We actually have a little bit of divergence on this. Okay, from there to there is level or slightly higher, but on the stochastic, we have divergence. And the last one then, I'm going to leave that one on, is the MACD. Now the problem is with the MACD, there's loads of different There's loads of different MACDs. There's loads of different ones. I already use a standard one, okay? And the same with this. We're looking at this here again at this particular point here. And in this one, it's level. So on the stochastic or on the RSI, we didn't have divergence. On the MACD, we didn't have divergence, but on stochastic, we do. Now, the problem is that we need to use one of them. Now, you can't just use all three of them and see which one is correct. You need to stick to one of the three of them and pick one, and then that's the one that you use every single time. Now, the one I use is stochastic. I think it's just a better setup than the likes of the RSI and the MACD. Okay, but that's just my opinion. So it's a standard deviation 1413. That's just a standard one that I use. But again, it is down to you. Which one do you visually see that works better? And that's the one that you stick with forever. Okay, so they are the three things we need. Stocks 90-20. Again, you use it in conjunction with other stuff. You use it in conjunction with other stuff. You never use 90-20. You never use that on its own, or 90-10. Not 90-20. 90-10 would be. But that's the idea. So will I do one on divergence? I can actually do one on divergence. If you guys email me in or on the Discord channel, write down what you want. So for next Tuesday, I can have a few topics. So I can do divergence, I can do MACDs, I can do stochastic, I can go into pivot points, I can go into Fibonacci. So I can do all those things, or I can do them isolated ones where I'm actually showing you how to use it and I just post it on the YouTube channel. They're all things that if you guys want, you just let me know, and I can actually do a little video and then show it to you guys. But just make sure you're putting it in the YouTube channel or in the Discord or whatever. But if you're not following me on the likes of YouTube, make sure you click the subscribe, and then you can anytime I update it or put something on the YouTube channel, it's there for you guys. All right, everyone, it's been an absolute pleasure. Thank you very much. Hope you had a lovely evening. And it looks like we would be triggered into that on the 1 hour if we were taking it. Perfect. All right, everyone. Thank you. Bye-bye.